Okay, we promised you before the market opens our own small cap big idea, where our head of research Varindar ferrets out those small companies that you will miss, but he won't, for their solid fundamentals, bankable managements, companies that are likely to be the next big thing. So what's the next big idea?
Well, Saurashtra Cement is a company, market cap of only 360 crores, a flagship company of Mehta Group, which was formed in 1956, so not a new company. They market cement under the brand name of Hathi Cement. The Mehta Group also owns Gujarat Siddhi Cements, which is listed entity. Now, if you look at Saurashtra Cement, what actually attracted me towards this company was the valuations. It's the cheapest stock you will find in the cement space with no debt and return on equity over 40%. Imagine this company is available at a valuation of only $35 per ton compared to a replacement of anywhere between 90 to 100 per ton. So that means this company is available at 1/3 of the replacement cost in the market. Now they have a 1.5 million ton plant which is located at Saurashtra coast, which is very close to Ambuja operations. They export nearly 0.225 MTPA to Sri Lanka, which is by sea. The freight cost, if you just check via sales as a percentage of sales, is the lowest among all the competitors because of the sea advantage what they have. The company has a limestone for 3 times the current capacity. They have a mining lease which is running until 2041. So, if you're worried about the limestone, the raw material, the limestone and the mining lease, that is also secured by the company. Look at the earnings of this company. For FY15 consolidated, sales were up 5%. EBITDA was up 54% for this company. Margins improved from 10.9% to 15.9%. Reported profit was 67 crores compared to only 20.9 crores. And adjusted profit was 41 crores. FY15 consolidated EPS was nearly 8 rupees. And the company reported margins of nearly 16%, which is much higher than the peers. Even for second quarter, FY15, which is the recent numbers which is reported, sales was up 1%, but EBITDA was up 114% for this company. 114%, it is not 14%. But 114%. EBITDA margins were at 12.5% compared to 5.9% only. And profit of 10.3 crores compared to 1.9 crores, so a jump of nearly 6 times in terms of coming. So in the last 3-4 quarters, the company has been consistently giving good numbers.
Okay, just one question. If I look at the stock, in July of last year, the stock fell from 80 to 50. Any reason for that?
This is a total restructuring case, okay? In 2012-13, there was a complete restructuring happened with the company. There's no institutional holder, in this company. The only reason is because people are now looking at the consistency of the numbers coming in. HDFC Securities have come up with a report on this, and they mentioned that the stock can trade at 120 rupees per share. The current price is 70 rupees per share. Even if we assume that we give, or when HDFC Securities give a valuation of $60 per ton, which is actually 10% discount to the nearest competitor, which is Sanghi Industries, which is a comparable entity in Gujarat. Even if you go ahead and compare with Mangalam Cement, the fair value could be 90 per share. As I said, return on equity over 40%, no debt, cash-rich company. If you look at the debt in the last 3-4 years, it has come down from 120 crores to nil. So the debt has completely wiped off. What you should keep on your mind, keep an eye on the prices, cement prices in Gujarat. Quantity offtake would be important. Management action is another thing, and the dividend policy.
All right, that's plenty that you have packed into the reasons for looking at Saurashtra Cement. Remember, this is not a buy recommendation, but it's something that looks very compelling in terms of its fundamentals. Well, the markets have opened